news. I'm yet to decide.
Okay, well, I was asking specifically about U.S. part. I guess I should have actually clarified that because so much this morning was good news is bad news when it came to those job numbers. Hey, we just had a great chat with Alan Zafran, the founding partner and co-CEO at IEQ Capital. He's left us with a pretty optimistic tone. He said it's still possible to avoid a recession and kind of echoed what Fed Chair Jay Powell said on Wednesday when he was asked the same question. He said that if we do hit a recession, it could be okay for a lot of people because we have stronger balance sheet as consumers going into this, and companies, Katie, have stronger balance sheet as well.
Exactly. I mean, if depends on obviously the depth of the recession, the time, but to that last point, Tim, when we think about the default rate, it's so low, so historically low. Just another interesting quirk about this potential recession that we're in or are entering. Seems like a lot of people think that it could remain at those levels.
We just had a great conversation with Jason Katz over here on the TV side about the psychology of these big drawdowns and the pain that it makes you feel and the courage to stay invested and having that appropriate asset allocation, Caroline.
Yeah, really, we need to be, still people want to be in cash in this market. Today we tentatively go into stocks, and I think it's so notable that volumes are indeed higher on the day. We wanted to be long this market into the weekend. We saw, on average, your volume up 16% on the S&P vis-a-vis the last 20 trading days. S&P 500 closes up 52 points, let's call it. We're up 1.4%. The NASDAQ up 132 points. That's 1.3% on the higher side. Now, I will caution you that both benchmarks are down on the week. We're down more than 5.6% on the week for the NASDAQ, for example. The Dow is up 1.25%, and Dow really has continued to march, and we're currently up 400 points at 32,404. Bring it out. Let's have a little look at what's happening in terms of your Russell 2000, though, because we are, too, marching up more than a percentage point on your small caps.
Quite broad-based. I'll let Taylor go through the sectors and the industry groups, but when it comes to numbers, we saw more than 400 stocks move higher in the S&P 500 today, and only 99 move lower, Taylor.
Tim, it was really broad-based. Take a look at the sectors, a few levels underneath the surface, and there's a lot of green even in the, quote, worst performer sector. Take a look at the best ones. It's semiconductors, getting some durables, some materials in there. Thanks as well when you think about the yield story as of late and the climb higher. So you're getting sort of the classic value stocks that are coming back and providing a lot of leadership here today. To the downside, Katie, there were only 3 sectors in the red. It's communication, it's hardware equipment, and it's auto components. It's really auto components that were the only sector in the red. You're off about 2.6%, but really it has been a decent day for breadth.
A decent day for breadth. Yeah, it was easy to find some gainers. Found some really interesting stories here. Let's start with Starbucks, one of my favorite places to go in the morning. We broke the earnings yesterday.
Katie texted me the other day and said that the Starbucks that she went to ran out of cold brew.
Yeah. I don't get it.
Does that
get free coffee?
That's what I tell her all the time. She gets free cold brew here.
Soy sauce. It's about the little joys in the world. I don't know. In any case,
Frivolous.
Starbucks.
Frivolous, Katie.
There's a lot of people like me because we know that the fourth quarter comp sales beat estimates. China didn't look so great, but North America did a lot of the heavy lifting here. Shareholders were thrilled. Stock up 8.5% or so. We also talked a little bit about Block, another good day for this company. Its adjusted EBITDA beat expectations. In particular, you had Wall Street analysts singling out the performance of Block's Cash App business. The stock closed about 11.5% higher. Monster Beverage. This story is so fascinating. There was a really good article by Joe Weisenthal on the terminal that, I mean, Monster, it's just been impeccable. It crushed it on margins. It's at an all-time high right now, finishing up another 7.5% today. And Joe looked back to 1997, 333,000%. Did I get those numbers right?
Is that good, Katie?
It seems
better
really
than crypto.
good.
Seems pretty good.
Yeah, right?
All right, so the lesson is go back to 1997 and invest in Monster.
Yeah.
Got it. All right, let's talk about some of the decliners today. There were some pretty prominent decliners. I just want to start with a couple headlines that crossed the terminal. DraftKings is down 28% today, biggest drop ever. We also saw Carvana tumble to a record 39% to close at $8.77. Let's talk about the 3 that I chose, though. Tesla finishing the day down by 3.6%. It is the biggest drag on the S&P 500. Cloud stocks got really hit hard today. We saw shares of Twilio down by double digits, Atlassian down about 30%, Twilio down more than 30% after we saw weak results from them. Salesforce taking a hit as a result there. Salesforce actually down for a 5th day in a row and hitting a new 52-week low today. And then Warner Brothers Discovery reported after the bell yesterday, shares down close to 13%. The company said that third quarter revenue missed expectations. Analysts see weak trends when it comes to TV advertising as a continuing headwind.
Advertising, the headwind, but also what was a headwind today for the dollar at least was that jobs number that came in and ostensibly crushed it, to use Katie's turn of phrase. We are seeing, though, overall, still maybe some weakness underneath the hood, and I do want to shine a light on some of the unemployment data and indeed some of the worries about female participation, people of color being left behind. But at the moment, we do see a number that exceeds 190,000, and we see Bloomberg dollar index weakened by the most since 2020. What does that mean when you've got a Singaporean dollar surging 1.4%? Because that also takes some hope, some prayer, some reporting that is indeed China maybe will be easing some of its own COVID restrictions. The loonie having its best day since 2020 in terms of strengthening some 2%, that on the back of oil's move as well as the dollar goes lower. Aussie dollar up 3% on those hopes to do with China. So really an extraordinarily volatile FX space. And indeed in commodities as well. I'm looking at WTI crude up 5%. That back up to a 92 handle. I return my earpiece because overall I don't want to lose my Brent crude up $98 at the moment. This is all on the back of the hope of demand coming from China, the second largest economy, the biggest overall net buyer of oil. We look at nat gas up 8%. Steel, we saw some of the metals do. Zinc up 4% on the back of that China news, and indeed helped by dollar weakness. And I'm looking at what is a pretty mixed picture in terms of yields pushing higher generally. The Aussie yield coming down a little bit, but that was at the front end, and I feel that that was similar in the US, Taylor.
It was such a wild story, Caroline, when yields are actually falling on the front end of the yield curve. For a 2-year yield, you fell for the first time in 6 after rising for 5 straight days. Finally, a reprieve here. Same with the 5-year yield. Finally, yields are falling, but 10s, 20s, 30s yields are still rising, and out on the long end, you're up 9 basis points on the day. For the week, though, overall, it has been a story generally of yields are rising. You really see that on the 2-year yield, where we finished last Friday at a 440, and we've migrated northward again to 466. Again, Katie, this is a big week of the Federal Reserve and those meeting the jobs numbers this morning that has the front end, as always, back in focus.
And we have so many data points to look forward to next week, CPI. But to the point that you made on the dynamics of what we saw along the curve, you add that together, you did see the 2s10 steepen a little bit. Now it's at negative 50 basis points of inversion. What was the size and scope? It was the most inverted in, what, 40 years?
Since the 1980s at one point, when we woke up this morning, that inversion was negative 62 basis points. You recovered some of that. I think at 50, you're around the inversion levels of 08, of 2000, but you're getting close to where we were back in the 80s. And Tim, that hints that there might be a mistake, if you will, that a soft landing is becoming a less probable one.
Well, Taylor, I want to give you a shout out here because you just put this in the chat, but a new story from our own Chris Yancey about, sorry, what was that, Caroline?
Multitasking.
Well, yeah, I mean, well, this is a good one.
We talk. I mean, we've got an IB going. It's
Tweet at the same time.
Former Treasury Secretary Larry Summers, he's on Wall Street Week tonight with David Weston, and he gave an interview, and we might think back to that was sort of the pivotal moment in the press conference with Jay Powell on Wednesday, was when he talked about the terminal rate, and it might have to be higher than what the summary of economic projections said back in September. And Larry Summers says that number could be as high as 6% now. So forget 4.6%, 6% is what Summers says.
Rick Reeder, Caroline, was hinting at similar, saying that the Fed might overdo it and then don't worry, we'll just cut later and figure it out. But there has been a sense of maybe we're all just a little bit sort of driving blindly here a little bit, and just maybe overshooting is better than the risk of not doing enough.
And that is what they've said time and time again, that really to leave inflation unchecked is far bigger risk than to overdo it and to impact, of course, the unemployment level and the labor market as it stands. But here is the Federal Reserve. It's still macro trade that matters. We thought the micro would consume us. We thought the technology sell-off, for example, the earnings would draw us back. But overall, this is still a market that trades on macro, and we look ahead to CPI. I'll be interested to see how much politics has to play in terms of the moon music next week.
And speaking of politics, speaking of CPI, let's also talk about the oil move today. We're looking at crude up almost 5%, back above $90 a barrel. You have to imagine that's an inflationary impulse if it holds.
All right, that is going to do it, though, for our cross-platform coverage. Have a great weekend, everyone. We'll see you all next week.
You won't.
I won't. I'm going on vacation. I will miss you all.
Enjoy.
Thank you. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, and YouTube. A reminder that it's also available on Quick Take. We are simulcasting at Bloomberg Business Week. We're back Monday, same time, same place.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio in New York. Katie, good news is good news for the equity markets, at least by the end of the day today.
I am so tired of that just narrative, that mantra, whatever you want to call it. When can we put that to bed?
Well, okay, that's fine. I'll put it to bed now.
Okay, done.
But here's the thing.
Okay.
We saw the S&P 500 move between gains and losses 1, 2, 3, 4, 5, 6, 7, 8. I can't actually have lost track. It's literally dozens of times today because in the middle of the day, it was kind of just searching for direction. So a real moment of optimism toward the end of the day with the S&P finishing higher by more than 1.3%.
I don't know. We'll see if it holds. I don't trust any sort of action on a Friday anymore.
Is that because of 6% terminal rate?
That's in the conversation. I don't know.
All right, we'll continue chatting about this and more in just a few minutes. First up, a check of world and national news. Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden says companies like Viasat in the San Diego region will benefit from the recently passed CHIPS Act that will ramp up U.S. production of semiconductor chips.
I knew we couldn't rely on the supply chain because of whether it was a pandemic or political decisions made in China, Taiwan, other places that were not going to sell us the chips. It was having a profound impact on a lot of companies, including this one, and our ability to make these chips.
The CHIPS Act invests $52 billion to supercharge U.S. efforts to make semiconductor chips here in America. Well, President Biden earlier today hailed the latest jobs report showing an increase in U.S. employment, but he did acknowledge inflation is his top economic challenge. Voters see it as a top concern as well. Connecticut Governor Ned Lamont tells Bloomberg he believes Democrats need to paint with a broad brush.
I think anything that gives people confidence you're dealing with your long-term issues, it's just not the short-term, makes a difference. It's a sense of direction.
Connecticut Governor Ned Lamont. More tanks, anti-aircraft missiles, and drones are heading to Ukraine in the latest $400 million increment of military aid.
Pentagon press officer Sabrina Singh explained these will not be American tanks.
These tanks are coming from the Czech Republic defense industry, and the United States is paying for 45 of those to be refurbished, and the government of the Netherlands, matching our commitment, will provide an additional 45 tanks. These will be the most technically advanced tanks on the battlefield.
After contractors do the refurbishing, Singh said the first of the tanks will get to Ukraine late next month. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Tim Sedevec and Katie Greifeld, we're live in the Bloomberg Interactive Brokers studio. Among the most read on the Bloomberg terminal today is about a Trump ally, Tom Barrack, who's been acquitted in a foreign influence case. He was cleared of charges that he tried to influence the campaign and administration of his longtime friend, former President Donald Trump, as an agent of the United Arab Emirates. Katie?
The jury found that Barrack, 75 years old, he's not guilty of all 9 counts against him, including failing to register as a foreign agent, obstructing justice, and lying to federal agents. The Colony Capital LLC's founder, former assistant Matthew Grimes, he was also acquitted on 2 foreign agent counts following a 6-week trial in federal court in Brooklyn, New York.
It didn't take long for the jury to decide. The verdict came after barely 2 days of deliberations, and it was a stinging rebuke to federal prosecutors who claimed Barrack advanced the UAE's interest to help Colony secure $374 million, in investments from the Gulf states' sovereign wealth funds.
And it was an emotional day in court as this was being read. As the judge read the verdict, Barrack actually dropped his head down and began to weep, as did his ex-wife and his children. What's interesting is that one male juror pumped his fist in the air, saluting Barrack. A second shook his hand, while the former defendant, accompanied by his family, supporters, and lawyers, went to have his electronic ankle monitor removed.
Yeah, later outside the courthouse, Barrack praised the judge, jury, and the U.S. legal system. Here's what he said, quote, "I'm humbled. The system is amazing. People are amazing. I have no hostility, just proud to be American." Asked what he was going to do next, Barrack answered, "I'm going to go have a drink."
And remember, Barrack became a familiar face as a Trump campaign surrogate back in 2016. Prosecutors had alleged that many of Barrack's campaign activities were undertaken at the behest of the UAE, but again, acquitted on all charges.
Yeah, during the trial, the government laid out his contacts with Emirati officials and said he agreed in May 2016 to serve as a secret back channel to the Trump campaign and later administration. Check out this story and more. It's available on the Bloomberg terminal and at Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. A move higher, losing weekend. It is on to the weekend with the S&P 500 index up today by 50 points, higher by 1.3%. But for the week, the S&P was down 3.3%. The Dow today up 402, up by 1.3%. NASDAQ today advanced 132 points, higher by 1.3%. We did see an afternoon rally. 10-year yield 4.16% with a 2-year yielding 4.66%. Spot gold up $51 the ounce, a rally of 3.2% today on the precious metal at $16.81, while West Texas Intermediate crude was up 5%, $92.55 for a barrel of WTI. Traders are weighing mixed jobs numbers as they await next week's inflation data for more clues as to when the Federal Reserve will be able to slow down the pace of rate increases. Again, recapping, S&P up 1.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Let's get a view on what's going on in VC, Katie. We talk a lot about how financial conditions have tightened to a certain extent, and we see venture capital funding drying up when it comes to startups, but people out there are still raising money. Take Jack Selby, for example. He's managing director at Thiel Capital. That's of Peter Thiel Capital. He launched a new fund, AZVC. This is a $110 million fund. It's industry agnostic, and it's investing in startups based in Arizona. Jack joins us this afternoon from Phoenix, Arizona. Jack, how are you?
I'm very well. Thanks for having me. I appreciate it.
Yeah, it's good to have you with us. Should note that even though you are managing director at Thiel Capital, this fund that you recently raised has nothing to do with Thiel Capital. So you're essentially working two jobs here. Why go out and raise a fund separate from your day job?
Yeah, it's a great question. So I've been an Arizona resident for 20 years now. I was part of the group that had started PayPal back in the late 90s. And
heard of it? Are you
out of California?
Some people might call you part of the PayPal mafia, Jack, right?
That's right. That's right. But when we sold the business, I wanted to get out of California from a tax efficiency perspective, and Arizona was my choice. So I've been a happy resident here for 20 years now, and still, with my day job with Peter, I'm able to pop back and forth quite easily. It's an hour flight to Los Angeles, an hour and a half to the Bay Area. But, I've been in Arizona for 20 years and have been observing the local tech ecosystem here. And I've always felt like we've had most of the right ingredients, but they were just never coming together in the right way. So after complaining about it for a long time, I reached one of those points where you either have to find something new to complain about or do something about it. So I decided to do the latter, and that's really how the fund came about.
Well, I can always find something new to complain about. I think your method is a little bit more productive, though. Jack, it's interesting. This is an industry agnostic new fund. I mean, you do have guardrails in that it's going to invest in Arizona-only startups, but no guardrails in terms of the specific type of company that you're going at. I mean, what are you broadly looking for?
Yeah, that's right, Katie. So I think, the ecosystem here, while it's not entirely nascent, it's certainly nowhere near where we would be in the Bay Area or the equivalent. So I don't think I have the privilege of being able to call out specific sectors that I want to focus on. And I think instead I have to be just opportunistic and a generalist in terms of the companies I want to look at. So, for example, if you think about, kind of our top technology company that's based in Arizona, it's Carvana. And so what is Carvana at its core? It's a used car marketplace. And that seems like a very natural thing that should come out of a place like Arizona. And I like to joke, do you think that the next deep mind to compete with Google in AI is going to come out of Phoenix? Probably not. So let's, in Arizona, let's focus on sectors that we're relatively good at. And I think that's going to kind of drive where I look for investments with this new fund.
I'd be remiss if I didn't just mention, because you mentioned Carvana, to remind everybody that Carvana shares closed down 37% today, hitting a 5-year low after Morgan Stanley ended up pulling its rating. Jack, let's talk a little bit about where you see opportunities. I know Katie's sort of asking a similar question here, but I'm more interested in what you're seeing big picture when it comes to startups right now. I mean, if you think about your time in California in the 90s when you were at PayPal in the early years, and what has developed since then, and thinking about, ad tech, and then perhaps more recently, crypto, payments. What's like the big thing that we, as our Bloomberg audience, needs to be aware of when it comes to the types of things that excite you?
I think it's more of a macro answer, to be honest, Tim, because I got really lucky with this fund in Arizona. So, for example, if I had closed the fundraising process, say, in the first half of 2020, then I would have been deploying capital in the second half of that year, 2021. And I would argue that 2021 will probably go down as the worst vintage year for private tech investing of all time, just because valuations were so extreme. So I was very lucky to have missed that window just by dumb luck, but no complaints. And then secondly, if my fundraising process had extended into the first half of this year, when the cycle had already turned downward, trying to fulfill our raise, I think would have been very difficult. So, without giving you sector specific, because again, I don't think that's necessarily applicable here in Arizona. I'm entering into a market where valuations have come down significantly, and I think more importantly, company formation, when the cycle turns downward, is a great time to be investing in, the next PayPal, the next Google, the next equivalent, because, the big challenge, I think, back in 2020 and 21 is that the core ingredient for these companies, the world-class engineers, were just so outrageously expensive. And now that you're seeing displacement within, big tech and so forth, it's a lot easier to kind of get the band together to start one of these next world-class companies. So that's why I'm really excited about the timing, which again may have just been happenstance, but again, I won't complain.
Jack, less than a minute left here. You mentioned you got a little bit lucky on the timing, raising this before the cycle turned. Who are the investors in this fund?
Yeah, that's a great question. So, Katie, I raised the fund almost entirely from Arizona prospective LPs. And I could have gone to, we know the VC allocator world quite well from my day job with Peter. So I could have gone to places like Abu Dhabi and Tokyo and New York and so forth, and it would have been very straightforward. But what I did instead is I wanted to focus on the Arizona community and literally use the raise as a litmus test to see if the community here wanted to see if a venture capital fund could be put into business. And I honestly didn't know what the outcome was going to be. But to the credit of the local community, I mean, the anchor investor is APS, which publicly traded Pinnacle West Corporation, which is the largest utility in Arizona.
Right.
They wrote us a $25 million check to get us going. And the rest of the LPs are all Arizona folks. So I'm really heartened to say, I'm happy to say that, the vast majority of my folks are Arizona because they really want to help this community grow.
Jack Selby, Managing Director at Teal Capital, joining us on the phone from Phoenix, Arizona. Thank you so much, Jack. Appreciate it. It's Bloomberg Business Week.
broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser, who's on assignment today. In just a few minutes, we are going to be speaking with the founder of Grubhub. We take a startup themes, and this afternoon's final hour of our program, Mike Evans is going to be joining us. He's got a new book out. It's a memoir. It's called Hangry, A Startup Journey. But first, let's go over to Charlie Pellet and give us an update on the rally that we saw today. Hey, Charlie.
Indeed, the Dow, the S&P, NASDAQ all ending the Friday session, a jobs Friday with big gains. However, for the week, losing week for the Dow, the S&P, and NASDAQ. On the week, the S&P was down 3.3%. More on the numbers coming up in just a moment. Developing story this Friday, ex-MoviePass CEOs Ted Farnsworth and J. Mitchell Lowe have been charged with fraud by the Justice Department in Florida. So the Dow, the S&P, and NASDAQ all advanced today. We had the S&P 500 index climbing 50 points, up by 1.4%. Really a lot of those gains coming during the late afternoon. The Dow up 402, up 1.3%. NASDAQ up 132, a gain there of 1.3%. 10-year yield 4.16%, with the 2-year yielding 4.65%. Spot gold up 3.2%, $16.81 the ounce. Well, for investors, the big question has been, when might we see a Fed pivot? And that question today for Alan Zafran, the founding partner and co-CEO at IEQ Capital, who is our guest right here on Bloomberg Business Week.
What we are fearful of, and if you're bearish, is that the Fed's only going to pivot when the PMIs, the Purchasing Manager Index, which is a broad measure of economic activity, if it were to really plummet, the Fed would have no choice but to do so, and that probably only happens coincidentally with the labor market starting to get out of control.
Former Treasury Secretary Larry Summers sees a risk of the Fed needing to boost rates to 6% or higher to bring inflation under control, given a U.S. economy that's still running hot. Summers was interviewed on Wall Street Week with David Weston, which you can hear at 6 o'clock on Bloomberg Radio, 6 o'clock Wall Street time, and he had this to say about this morning's jobs report.
The good news is economy looking robust. The bad news is not much evidence of inflation restraint yet in train.
And again, 6 o'clock Wall Street time right here on Bloomberg Radio. 10-year yield 4.16%, 2-year 4.65%, spot gold up 3.2%, $16.80 the ounce. West Texas Intermediate crude up 5%, $92.57 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we're very pleased right now to be joined by Mike Evans. He's the founder of Grubhub. He's got a brand new book out. It's a memoir. It's called Hangry, A Startup Journey. Mike, good to have you with us. How are you?
I'm great. How are you?
We're doing well, thanks. Really like to go with the startup theme that we have at the end of our program today, just speaking with a venture capitalist who raised more than $100 million to deploy. And now we got you, who has some real experience founding a company, which we're going to talk about in just a second. How did you turn a pizza craving into a hobby and then a business?
Yeah, it started out, like you said, it was a craving, and I ended up quitting my job just after the first restaurant was sold, and I really had to sign up restaurants so that I could eat because I wasn't making any income. And so it very quickly developed from an online order, from a delivery guide to an online ordering platform, and I was trying to pay off my school debt, and I overshot. It got a lot bigger than that.
The debt got a lot bigger, that is.
No.
Everything?
Everything got bigger, Mike?
No, no, I'm sorry. I overshot. The business got a lot bigger, and then was able to pay off my student loans, obviously, and then ran the company up through the IPO. And there was a lot of twists and turns as it happened. I mean, it's the nature of innovation.
Well, let's get into the twists and turns. The time before the IPO. Tell us about just getting from start A to that ultimate point B.
Yeah, it was not a straight line from A to B, and that's the nature of startups. Every time that you innovate something and you create something new. So at start, it was just finding all the restaurants that deliver to you, and then it became online ordering. And every time we did that, there was all sorts of other companies that copied us. And so the only true competitive differentiator is to keep innovating, to sort of stay ahead of that curve. And so ultimately, we really doubled down on customer service. And by the time of the IPO, we had 80,000 restaurants on the platform, and it was humming along.
Mike, you're no longer involved in Grubhub. You started another business since then. But I want to talk about the food delivery as a business, because with the likes of Uber Eats, with the likes of so many platforms that restaurants can choose from right now, and also how much it costs restaurants to actually make food. I'm wondering, looking back, about the business, if there is a chance for this type of thing to become profitable on a wide scale.
Yeah, I think so. Grubhub was profitable before every financing we took. We started it without investment money and bootstrapped. It was profitable at the IPO and for 8 quarters before and after the IPO, and that was at scale. And so I absolutely think that it's possible to run these companies at profit.
Why isn't that happening now?
Really 2 reasons. One is there has been pressure from public markets for companies to show growth as opposed to profitability. And so when everybody's banging that drum as loudly as possible, eventually companies listen. And so there's certainly no motivation to drive for profitability within public markets for startups. They don't get a market cap as a result of being profitable. But maybe more importantly, as competition has entered the space, the differentiation between the different entities has really decreased. And so because of that, the companies have to spend a lot more on marketing and remarketing back to customers that they already had, instead of enjoying loyalty and frequency like you do when you really have a differentiated product.
Well, I was just going to say, taking an outside view from where you're sitting today, and you look at the different business models that are out there when it comes to delivery, which one is the best in your opinion? I mean, is it the ones that take a portion of the order price and charge the restaurants? Is it ones that have an additional fee for the person who orders it, like that delivery fee that goes on there, like we see with some of the platforms now? Which one's the best?
I think that the models as they exist right now are not all that dissimilar from each other. And I think the one that really is going to stand out is going to be the one that gets customers, diners, to repeat purchase frequently because it's a better product. And that means that the product that actually those companies deliver to the drivers and to the restaurants has to be the best, and that drives differentiation. And then you're not wasting as much money on marketing, and those things become profitable. I don't think that charging like crazy to the customer or to the restaurant is the solution. It's about differentiation.
Yeah, it's incredible because you were so early in on this business, and it's changed quite a bit too, and investors have certainly treated it differently in the past couple of years. Hey, we're talking with Mike Evans. He's the founder of Grubhub. He's got a new book out. It's a memoir. It's called Hangry, A Startup Journey. We talked a lot about the business models of the different delivery services that exist out there now. When we come back, we're going to talk more about the journey of getting Grubhub from a startup to an IPO that valued it at about $2 billion. First up, though, let's head down to Washington, D.C. for the latest world and national news. For that, we go to Nancy Lyons, who's standing by in our 99.1 studio. Hey there, Nance.
Thanks, Tim. Former President Trump is tentatively planning to announce his widely anticipated 2024 campaign for the White House during the week after U.S. midterm elections. That's according to people familiar with the matter, but they do say the situation is fluid. Bloomberg Government's Emily Wilkins says we may have the midterms Tuesday, but eyes are already on 2024.
We've already heard Biden say that he's going to run again. We're expecting this announcement from Trump. Certainly there will be others who will be angling to get into both potential fields. We're just on this never-ending treadmill of elections at this point, and we're about to jump off 2022 and onto 2024.
Again, Bloomberg Government's Emily Wilkins. Tom Barrack, a Trump loyalist, has been acquitted at a federal trial in which he was accused of using his access to the former president to secretly promote the interests of the United Arab Emirates. A jury in Brooklyn deliberated 3 days before finding Barrack not guilty of acting as an unregistered agent of a foreign government. He spoke after the verdict.
God bless America. The system works.
Barrack says he has no hostility. The man accused of breaking into the home of House Speaker Nancy Pelosi and attacking her husband with a hammer will stay in jail. David DePape was not in court for a hearing today. He has pleaded not guilty, even though police say he admitted to the crime. His next court date has been scheduled for December 14th. Strong sales have boosted the Powerball jackpot to an estimated $1.6 billion, making it the largest lottery prize in history. The next drawing is tomorrow night. Your odds of winning are 1 in 292 million. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Well, our Business Week weekend show features Bloomberg Business Week entertainment editor Felix Gillette and New York Times television reporter John Coblin. They discuss their brand new book. It's called It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. And in this excerpt, they talk about how HBO overcame some early threats to its survival.
What a novel concept. For decades, radio and TV, it's for free. And now all of a sudden we want to charge you a monthly fee. I mean, that's hard to entice subscribers to pay a few bucks a month.
And almost immediately, the Hollywood studios were like, wait, why are we allowing this middleman to come in and make all this money by distributing our product? Like, why don't we just create our own satellite distributed cable network, which they called Premiere, and was just supposed to be an HBO killer. And luckily for HBO, it was their first kind of near-death experience. And the Department of Justice intervened on antitrust grounds, and HBO got to live another day.
HBO got to live another day, as Felix Gillette and John Coblin talked about with us earlier this week, and you can find the full interview in our weekend show. HBO has overcome a lot of obstacles. They overcame competition. They overcame the invention of the VCR, the invention of the DVD, Netflix, the delivering of the DVD, and then, of course, the invention of streaming and the rise of streaming. The question is where HBO goes from here. Katie, do you know how old HBO is?
I was just hoping you could tell me, actually.
What would you guess?
Oh, my God. Well, I had no idea that Monster Beverage had been around since 1997. I don't know. Why do I have the 70s on my mind? How wrong?
Yeah, you're pretty. Yes,
no way.
You're doing really well.
Okay.
Okay, so HBO will turn 50 on November 8th.
Don't make me do math.
Yeah,
just give me a year.
The 1970s.
The 1970s. Okay.
1972.
Yeah. Wow. It's a long, illustrious career. I can see you doing the math in your head
well,
right now.
I did the math and said 50.
Yeah.
November 8th.
I am surprised by that.
Okay, well, check out this interview in our weekend show. Remember John Coblin and Felix Gillette. Their new book, It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. 8 a.m. Wall Street time on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. A move higher for the Dow, the S&P, and NASDAQ today. Losing week. Jobs top forecast. Unemployment up in a mixed picture for the Federal Reserve. S&P 500 rebounded after a 4-day sell-off. S&P up 50 today, a gain of 1.4%. The Dow up 402, up 1.3%. NASDAQ up 132, up by 1.3%. 10-year yield 4.15%, with the 2-year yielding 4.65%. Spot gold up 3.1%, $16.80 the ounce, while West Texas Intermediate crude today up by 4.8%, $92.48 a barrel. So an up-day, losing week. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. I want to get right back to Mike Evans. He's the founder of Grubhub and also the author of a new memoir, Hangry, a startup journey. Mike, I want to go back to the early days of Grubhub and the idea of toiling away for 80-hour weeks and the startup story there. When you look around the landscape today and you see so many, the idea that like so many people are interested in doing startups, unless it's, you know, it's fewer than there were. I don't want to say fewer because I don't know the actual data here, but it's not getting as much fun. They're not getting as much funding as they did last year because of the way that the economy has been this year and the way that we've seen venture spend come down. But I'm wondering, when you look at the landscape this year, like what you're optimistic about, what you're excited about in terms of startups.
Yeah, there's this narrative that people have this go and get a business plan, and then they get this friends and family money, and then venture capitalists throw millions of dollars at them, and then suddenly their idea is a real company. And that is the extraordinarily small percentage of businesses that are started in the United States. Grubhub was started, we bootstrapped. We had no investment for the first 4 years, and we got all the way up to just about $500,000 in revenue before we took investment. And so, I always suggest to other entrepreneurs, just start. Like, you don't need a ton of investment. You can learn almost every skill that you need to know to do a startup and do it yourself, which does take a lot of work. It is a bit of a grind, but it's a lot more controllable output than sort of hoping that a VC will invest in you. And so I think there's still plenty of startup activity and entrepreneurial activity happening in the very early seed stages right now that doesn't necessarily have to depend on venture capital investment.
Mike, you touch on something I actually think about a lot, because obviously on Bloomberg Radio, we talk to a lot of the successful founders, the successful entrepreneurs. We don't talk to a lot of people, who have tried to start something new, to create a business, and it ultimately didn't work out. And I'm curious, in those 4 years, for example, where you didn't have necessarily investor funding, did you know that Grubhub would be a success? Talk us through some of the self-reflection that you went on.
Yeah, I was pretty clear with my goals early on. I wanted to make enough money to pay off my school debt. And then later on, I wanted to create a business that really leveled the playing field for independent restaurants. And as I was going through that, I tried things that didn't work, right? I tried things that did work, and I tried things that didn't. And because of that, because it's the nature of innovation is experimental, you have to be willing to quit the things that aren't working. You have to put the work in on the things that might work and that are working. But it's really important to not get a blind spot and just get stuck in beating your head against something where it's just not working out. And that was the nature of the thing that I really learned in those first few years. And venture capital can hide that. If you have enough cash to not make tough choices, then you don't necessarily have as much motivation to stop the things that aren't working.
Well, you write toward the end of the book about how in the later years, when you were with the company, how you engineered yourself out of a job, knowing that you'd be leaving at the IPO. What happened then?
So I then rode off into the sunset. I took a bicycle ride from Virginia to Oregon. I literally rode off into the sunset to sort of reflect on what I was going to do, and then think about what came next. And ultimately, what came next is my new business, which is an on-demand handy person service called Fixer.com. And it's a lot like any of those other businesses you see, Thumbtack or Angie's List or Home Advisor, with the very significant difference that we employ the workers because we don't think there are enough skilled workers around to go around.
That's very different.
It's very different.
That's not gig work.
No, it's about as far away from gig work as you get. it's a very it's a high income career with economic mobility, but it creates great experiences for customers in the home. And so ultimately, since we're providing a great experience, we can charge a premium for it, and we can pay our workers a great living wage. And so it's both creating impact, but it's also it's a profitable business.
Well, let's talk about scaling that, Mike, because, and maybe this is, maybe you're onto something with, because gig work is so hard to scale and actually make profitable, as we've learned. When I'm talking real profits here, not, adjusted EBITDA profits. When we talk about Uber and Lyft and other services that employ gig workers, how much do you have to pay the workers you employ that end up being handy people?
You know what blows my mind about this debate is that everybody says that it's hard to scale a W-2 workforce. And for 5,000-6,000 years of human history,
that's all we've done.
It's 10 of it that we had gig work, and suddenly everybody's like, oh, well, that's the only way you can do it. Yes, there are plenty of businesses that have 10, 20, 30, 50,000 employees and are doing just fine for both growth and margin. And so we think that we can do that by virtue of the fact that we're hiring people who are in retail or work at a grocery store or something like that, and then we're giving them a career path. The economic mobility is so fast that that people sign up for opportunity. You don't have to outpay those other roles. You just have to give people the training so that they can ladder themselves up into those higher income roles.
I didn't hear a number though, Mike. 18, 15 an hour?
No, we pay $32 an hour for when people are billing.
So much, especially when you think about it from the context of gig work. Wow.
With benefits, by the way. And to be clear, it's still a great experience in the home, and it's not like it's crazy expensive for the homeowner, especially when you consider, we clean up after ourselves, the quality of the work is good, we show up when we say we're going to work, we show up. When we're all working from home, it's so hard when somebody doesn't actually show up at the right time, and then you have to leave a Zoom call to go work with somebody who showed up at the wrong time. And so ultimately, we're creating such a good experience in the home that the economics work.
Yeah, I've definitely had a few Zoom calls over the past 3 years where I've had to evacuate to a bathroom or something because there's someone in my apartment. But in any case, I want to go back to the current landscape. I want to talk about the IPO market because obviously that has just fallen off a cliff. Maybe there's a lot of companies in the pipeline, but they're not leaving the pipeline. What would you say to a company that's considering going public right now? Would you ride it out, or do you think they should just, come out of the pipeline? Let's go.
I would say that finance doesn't drive strategy, and timing drives strategy even less. If you're building a company that has great fundamentals, that's growing, and isn't burning cash like crazy, it doesn't matter if there's a slow spot or a slow time in the middle of the IPO market. You just ride it out. If you're building a company that's trying to get rich quick and just trying to fleece investors by being high growth but can never be profitable, then the timing really hurts you. And so I would just suggest build a company that has good fundamentals.
What are some of those companies with good fundamentals that you see out there?
Oh man, I'm stumped. Well, Fixer, the company I'm running right now.
Well, okay. So we only have a minute left, or actually 30 seconds left. But talk about scale there. I mean, where are you available with Fixer, and what's your growth plan? Just 30 seconds left.
Yeah, we're in Chicago, Phoenix, Denver, Dallas, and Seattle. We plan to launch anywhere from 2 to 10 more cities next year.
New York on that list?
Yeah, hopefully. The regulatory situation in New York makes it's a big investment to do it, and so when we do it, we want to do it right.
All right. Well, I mean, there's a demand for that, at least in my apartment building. Hey, Mike, really great to have you. We got to get you back on the program. Really appreciate you taking the time this afternoon and joining us on Bloomberg Business Week. Mike Evans is the founder of Grubhub. He's also got Fixer as well. He joined us this afternoon via Zoom from Chicago. He's got a brand new book out. It's a memoir about his time building Grubhub. It's called Hangry, A Startup Journey. Really appreciate you taking the time, Mike. That is going to do it for Bloomberg Business Week this afternoon. A big thank you to Katie Greifeld for filling in for Carol Master this afternoon.
Thank you, Tim.
Thank you. And
This was
thanks for
fun.
filling in for me next week.
Yeah, have a great vacation.
This is